If I had to buy one ETF to hold forever, which one would it be and why? Have you ever gazed out at the vast landscape of investment options, stocks, bonds, real estate, commodities, cryptocurrencies, and felt a sense of overwhelm? The sheer volume of choices, the constant stream of financial news, the endless parade of hot new trends, can make building a truly robust investment portfolio feel like an impossibly complex task. Many of us, especially as we plan for or navigate retirement planning, yearn for simplicity, for a clear path to enduring financial security without the constant need for vigilance and frantic adjustments. Imagine, for a moment, being granted a single, powerful wish in the realm of your financial planning. A wish that allows you to make one investment decision, just one, that you could then simply set aside and hold forever, knowing it would continue to grow, to compound, to build significant long-term wealth for you and your legacy. If that were the case, if I personally had to choose just one single exchange-traded fund, or ETF, to buy today and hold for the rest of my life, which one would it be, and more importantly, why? That's the powerful question we're answering today. We're going to unveil the single most effective, battle-tested, and profoundly simple investment strategy for achieving true financial independence. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this valuable information. Now let's continue. The unbeatable champion, owning a piece of everything. So if I had to pick just one ETF to hold forever, it would be a Total Stock Market ETF. Now, what exactly is a Total Stock Market ETF? Picture it like this. Instead of trying to pick the winning horse in a massive race, you simply buy a tiny piece of every single horse in the entire race. You own a sliver of the entire American economy. This type of ETF invests in thousands of publicly traded companies, from the giants the tech behemoths, the consumer staples powerhouses, all the way down to the innovative mid-sized and smaller companies that often fly under the radar. It's a single investment that provides you with unparalleled diversification across every sector, every industry, and every size of business within a nation's equity market. The brilliance of this approach lies in its elegant simplicity and its underlying philosophy. It's not about predicting the future or trying to outperform the market, which even seasoned professionals struggle to do consistently. Instead, it's about capturing the immense collective earning potential of human ingenuity and economic progress over the long sweep of history. It's the ultimate passive investment. You are betting on the enduring strength and innovation of the entire system, not just a few select players. The pillars of power, why this strategy excels. Why choose a Total Stock Market ETF over other options, especially for a hold forever strategy? There are several compelling reasons that resonate deeply with older investors and those focused on wealth creation. First, diversification beyond measure. We've touched on this, but it bears repeating. When you own a Total Stock Market ETF, you are instantly diversified across thousands of companies. This is your ultimate shield against investment risk. If one company falters, or even an entire industry faces headwinds, the impact on your overall portfolio is minimal because you own so many other thriving businesses. This broad exposure is like having thousands of small streams feeding into one mighty river. If one stream dries up, the river still flows powerfully. This reduces portfolio volatility and enhances wealth preservation. Second, incredibly low costs. This is a game changer for long-term wealth. Total stock market ETFs are typically passively managed, meaning they simply track an index rather than having expensive teams of analysts trying to beat it. This translates into incredibly low expense ratios, often a mere fraction of a percent annually. Over decades, these minuscule fees can save you tens, even hundreds of thousands of dollars in accumulated costs. Think of it. More of your money stays invested, working for you, compounding relentlessly, instead of being siphoned off in fees. This directly boosts your net returns. Third, the power of compounding returns. This is where your financial abundance truly takes flight. Because you own a piece of so many companies as they grow, innovate, and collectively increase their profitability, the value of your ETF grows. Any dividends paid out by these companies are often automatically reinvested, buying you even more shares of the ETF. These new shares then earn their own returns, and so on. It's an exponential growth engine. Albert Einstein famously called compounding the eighth wonder of the world. For a hold forever strategy, this is the engine that drives immense financial growth over multiple decades, turning modest initial contributions into substantial retirement income. Fourth, simplicity and time freedom. For busy professionals, retirees, or anyone who values their time, this is invaluable. You don't need to spend countless hours researching individual stocks, agonizing over market timing, or reacting to every news headline. Once you invest in a total stock market ETF, your primary job becomes to simply continue investing regularly and allow the power of the market to work its magic. This simple, elegant investment approach frees you from the stress and complexity often associated with active investing. It's the ultimate set-it-and-forget-it strategy for financial success. Navigating the path, practical application for your portfolio. So, how do you implement this powerful investment strategy? It's remarkably straightforward. Step 1. Choose your ETF provider. Look for a reputable, low-cost provider. Vanguard, iShares, and Schwab are excellent choices, known for their broad market ETFs with ultra-low expense ratios. Funds like VTI, Vanguard Total Stock Market ETF, or ICHOT, iShares Core S&P Total U.S. Stock Market ETF, are prime examples. Their goal is simply to mirror the performance of the entire market as closely as possible, without trying to beat it. Step 2. Establish your investment account. If you don't already have one, open a brokerage account. For retirement planning, prioritize tax-advantaged accounts like an individual retirement account, IRA, or a 401k, especially Roth versions if your income allows. These offer significant tax efficiency benefits that accelerate your wealth accumulation over the long term. For other savings, a standard taxable brokerage account works perfectly. Step 3. Implement a consistent investment schedule. This is perhaps the most crucial step for a hold forever strategy. Commit to investing a fixed amount of money regularly, monthly, bi-weekly, or quarterly, regardless of how the market is performing. This practice is known as dollar cost averaging. When prices are high, your fixed amount buys fewer shares. When prices are low, it buys more. Over time, this averages out your purchase price and reduces the impact of short-term market fluctuations, smoothing your ride to long-term wealth. It removes emotion from your financial decisions. Step 4. Reinvest your dividends. Ensure that any dividends generated by the ETF are automatically reinvested back into buying more shares of the same ETF. This supercharges the compounding returns effect we discussed earlier, significantly enhancing your earning potential over decades. Step 5. Resist the urge to tinker. This is often the hardest part for investors. Once you've chosen your total stock market ETF and set up your investment schedule, resist the temptation to check it constantly, to react to daily news, or to try and time the market. The power of this strategy comes from its long-term, consistent application. Think of it like planting a mighty oak tree. You plant the seed, water it regularly, and then give it decades to grow, trusting in its natural resilience and the power of time. The promise of the horizon, a legacy of abundance. My friends, the concept of a single, hold forever ETF might seem overly simplistic in a world clamoring for complex financial solutions. Yet, its power lies precisely in that simplicity. It empowers you to participate directly in the vast engine of global economic growth, effortlessly diversifying your investment risk, minimizing costs, and harnessing the unparalleled force of compounding returns. For older investors and those building a significant financial legacy, this approach offers not just the promise of financial success, but also a profound sense of peace. You're no longer chasing elusive gains or battling market volatility. You are a steady partner in the progress of the world's most dynamic companies. This isn't just about accumulating money. It's about freeing up your time, reducing your financial stress, and building a foundation of financial abundance that can support your dreams, your passions, and the generations to come. The path to financial independence can be simpler, more robust, and more rewarding than you ever imagined. Call to action. If this conversation sparked a new perspective on your investment strategy or provided valuable insights for your financial planning, please consider giving this video a like. Your engagement helps us share these powerful concepts with more people. Don't forget to subscribe to our channel for more deep dives into wealth management and long-term investment. And importantly, share your thoughts in the comments below. What's your hold forever investment, or what questions does this bring up for your financial future? We'd love to hear from you. Disclaimer: this video is for equipping, educating, and empowering and should not be considered financial advice. Investing involves risk. Always consult with a qualified financial professional before making any investment decisions. Your financial well-being is paramount.